Hi, I'm Jimmy. In this video, I'm going to walk through my analysis of Walmart, ticker symbol WMT. This is the 29th video in our series where we're analyzing all 30 stocks in the Dow Jones Industrial Average. We can see a link in the description below for all the other videos. Well, we're then going to take all that analysis and we're going to build three different portfolios, a dividend, a value, and a growth portfolio. So let's start by breaking out last year's revenue by segment. So they have three reportable segments. They have Walmart US with 64%, Walmart International with 23%, and then the Sam's Club gives the rest. Now, what's interesting about this particular breakdown is that this breakdown has been fairly consistent for a long time. This chart, this one goes back all the way to the year 2000, and this is a breakdown of these three reportable segments as they contribute to revenue. So this is a percentage contribution to revenue chart. Now, I bring this out early in the video because Walmart has made it very clear that they want to grow their international business. And I found this chart interesting because I would have thought that Walmart International would have gained more ground on the very mature Walmart US. Now, we can see that there were a few years right in there that the international business did well versus the US business, but then it gave it back in the past couple of years. And we're left at about where we started back in 2009. Now, I just want to be clear about something. This is not a chart of revenue. This is a chart of revenue as compared to each other. So it's the total contribution to revenue. And when I was doing my research, I only created this chart because I know that generally speaking, the US economy is going to grow fairly slowly. Call it 2, 3, 4, 5%. But when you compare that to the emerging markets, it's not very fast. So what I was hoping and half expecting when I created this chart was to see the international segment picking up ground in the US segment, which would imply a better growth rate than just what can be produced in the United States. So that's why I created this chart. Now, when we switch to an actual revenue chart, well, we can see that how each segment actually grown. We can see that Sam's Club, they've been quite stagnant. They're the green bars at the bottom. With the international segment, we can see that they had a spike back here, but then they gave it back. Now that sort of explains the hump that we saw in the percentage of revenue chart. Then we can see the US segment has continued to grow nicely outside of that little lull in the middle. Okay, so now let's look a bit closer at some of what's happening with Walmart. Now, I think we all know what Walmart does. They are a traditional retailer. They've really been the king of the traditional retailer, and they've been a price leader in almost every segment that they compete in. Now, that's one of the advantages of being so large. But with the emergence of Amazon, Walmart is doing everything they can to try to pick up ground in the e-commerce space. In 2016, they bought Jet.com. Last year, they bought a majority stake in Flipkart. Walmart also owns a 10% stake in JD.com. But Flipkart just happened, and there's also some very interesting things happening with Flipkart, so let's focus there for a second. So last year, Walmart goes out and buys a majority stake in Flipkart for about $16 billion. And for those who aren't aware of what Flipkart is, well, essentially, it's like the Amazon of India. Now, that's one of those emerging economies that I was talking about that could lead to great growth for the international segment. Well, Flipkart was started by 2 Amazon employees, and they have more than 30,000 employees and about $3 billion in revenue. Well, in February of 2019, the government of India made a ruling to essentially try to level the playing field for their local retailers. And it really limits Flipkart's ability to do business the way that they were doing it. It will affect their ability to do pricing, ability to buy stakes in other retailers. So essentially, this is going to make it a lot more difficult for Walmart to do business. Now, I believe that right now in India, the various phases of the Indian election are happening. And depending on the results of those elections, well, that could drastically influence Walmart's ability to make money from the Flipkart acquisition. So we'll have to see how all of that shakes out, but that is the potential to really impact the growth in India for Walmart. But it's not all bad news for Walmart stock. So let's look at just a few more numbers, and then we'll go ahead and try to value Walmart stock. So we already saw a chart of revenue. This is a chart of net income. And as we can see, it was up in 2018, but it seems, I'd say that the overall trend of the net income has been about sideways. Now, one of the interesting things about Walmart is, frankly, their size. This is a chart of total revenue, and look at how much revenue they put up last year. They put up over $500 billion in revenue. So to put that in perspective, in 2018, Coca-Cola put up about $32 billion in revenue. Nike put up about $38 billion. Target had about $75 billion, and Amazon put up about $233 billion. So I bring this out because personally, I need to remember that this size is going to be difficult. It's going to make it difficult for Walmart to grow at any impressive amount. Now, Walmart is doing a lot to expand their e-commerce platform, which should help them grow. Now, Flipkart was just one example of this. In fact, they have more than 11,000 stores, and I would think that that should help them develop a solid e-commerce plan. They're already known as masters of logistics, so that should help them efficiently compete in the delivery game. So, this brings us to my humble opinion of the future of Walmart as they go up against Amazon. Now, I know this may sound a bit crazy, but I actually think that Amazon is going to be a good thing for Walmart in the long run. So here's my reasoning. Amazon is going around wiping out all the little niches, and I'm thinking of stores like Toys R Us. Now, Walmart is going to get a piece of that business. Sure, Amazon's going to get a large piece of that business too, but Walmart is so large and has such economies of scale and such enormous free cash flow that I simply can't see Amazon wiping out Walmart. Sure, at the rate that they're growing, Amazon will likely one day be bigger than Walmart is from a revenue perspective, and then Amazon's going to have to deal with the burden of size just like Walmart is today. But Walmart has such economies of scale right now and such pricing power that it's going to be very difficult for Amazon to undercut them for any long period of time. It's more likely that Amazon, in my opinion, is just going to go around wiping out all of Walmart's competition for them. Now, price wars aren't good for any business or industry. That's how you end up with profit margins that look like this. Now, last year, Walmart had profit margins just short of 3%, and Amazon wasn't much better, right around 4%, I believe. But Walmart does have fantastic free cash flow. This is a chart of free cash flow going back about the past 10 years. So right now, Walmart's putting up about $17 billion in free cash flow. This type of free cash flow should allow for them to take chances on companies like Flipkart or JD.com, which is doing pretty good in the Chinese market. And when we add analyst estimates to the free cash flow, well, this is what that chart looks like. So now that we have free cash flow estimates, we can try to use that to determine the fair value of Walmart stock. So switching over to our discounted cash flow valuation, well, I calculated fair value of Walmart stock to be about $116 a share. And given that the stock is trading at about $103 per share right now, well, it seems like there's some pretty decent upside. Now, some of the most popular comments that I get when I make videos like this is, where do I get these numbers from and how do I calculate it? And I've actually made some videos on pieces of this process, but never the entire process. I have a video on what is free cash flow, where it comes from, and how it could be used. And I have another one on the weighted average cost of capital, and another piece of it, which is the capital asset pricing model, as to how to help you calculate it. But I was thinking about putting together a video on the entire process. If that's something you think would be interesting, let me know in the comments below. Now, there would likely be different versions of this calculation in the video, because the way that I do it here is really a rough and dirty way of doing it. Because technically, this fair value here, well, this is the fair value for the company. And to get the true fair value of the stock, well, you need to make some adjustments. You'd have to adjust for cash, you'd have to adjust for debt, and you probably wouldn't use the weighted average cost of capital. Instead, you'd probably use the required rate of return. But since required rate of return is tricky for me to use, not knowing what everybody's required rate of return would be, well, it makes sense to just do it the way I can. So when I do a more expansive video, it wouldn't just be these numbers. I would try to expand it the proper way, and there's a couple different ways of doing it. That being said, for Walmart, it probably wouldn't affect it too much, because Walmart's their cash, they have about $41 billion in cash, they got about $49 billion in debt, so there wouldn't be much impact of that. And at the end of the day, one of the big drivers of this is the weighted average cost of capital. And I was actually fairly conservative with this weighted average cost of capital. To illustrate this, this is a quarterly history of the weighted average cost of capital going back to 2009. And the average WACC during this period was about 6.6%. And what I used was the current WACC of 7.5%. Now, if I had used the 6.6%, well, the fair value would have jumped all the way to 142. And I bring this out because I think it's important that people don't ever look at this number and say, oh, the fair value is $123 or $142 as if it's somehow a fact. A lot of this is opinion, and virtually all of it is opinion, except for the historical numbers. That being said, I think a video illustrating how to shape that opinion to be as accurate as possible, at least the way I do it, could be useful. All that being said, I'm a big fan of Walmart. I actually think they're going to do quite well in the long run. Now, I recently did a collaboration video for good stocks in a struggling economy, and Walmart is actually a great stock for that type of environment. Now, the question for us is, do we think that this stock belongs in any of our Dow 30 portfolios? I don't think it belongs in the growth portfolio. I think we made that case. I think it probably belongs in the value portfolio, and they currently have a dividend yield of about 2%, so maybe in the dividend portfolio as a stabilizer, but that's borderline to me. But what do you think? Do you think Walmart's a good investment today, or do you think that we should hold off to get a larger margin of safety? Right now, there's about 15% or so upside. Should we wait for that to be, let's say, 25%? Let me know what you think in the comments below. Thank you for sticking with me all the way to the end of the video. If you haven't done so yet, please hit the subscribe button, and I'll see you in the next video. Thanks.